Have you heard the term penny wise and pound foolish? Well, by the end of this video, I'll help you understand exactly how it relates to future taxes so that you can see what you may not have known. Welcome back to Navigate Your Wealth. My name is Karen Stawicki.
And I'm Samantha Irish.
For the best advice on how to use both life insurance and annuities to create a successful retirement, subscribe to our channel and hit the notifications bell to be notified when we upload new videos.
So why should I be worried about future taxes? That might be the most important question that you'll ever need the answer to. Let's face it, paying taxes at any age is not fun. And at any rate, it's never good. Whatever amount you have to pay always feels like it's too much, no matter what the amount is. This is why when we have the opportunity to not pay any more than we have to, we jump on it. Your IRA or your 401k contribution is a perfect example of this. I'll bet at least one time in your life, your accountant has said, "Did you know if you made an IRA contribution, we can lower your taxes?" This is not a lie, but it's also not the whole story either. Yes, you will lower your taxes today, but the tax man, he's coming, and he's always going to get his. And with your help, it's going to be a much bigger amount in the future because it's going to grow. But you've just grown that investment, and then you're going to have to pay tax on it.
But you're thinking, wait a minute, I'm going to be in a lower tax bracket when I retire, so it's going to be better. Let me ask you a question. Who said that? Did someone put it in writing or give you a promise or a guarantee that you're going to be in a lower tax bracket when you retire? Or do you just believe that because someone said it? Well, for those of you who are watching this right now and you're in your 20s or 30s, you have very little chance of ever being in a lower tax bracket. Seriously now. How do I know that? Well, think about it. Are you not going to earn more over your lifetime as you climb the ladder of success? You're not going to be happy earning less than you are now. So 30 years from now, when you retire, and let's assume that tax rates have stayed exactly where they are today, because that's the only way you're going to be in a lower tax bracket when you retire. Let's for a moment assume that you're already paying taxes at the top marginal bracket. Okay, so you're looking at retirement thinking, oh my, I don't need that much, and I'm going to be reporting less income and retirement, and so it's going to drop me a bracket or two, right? That's what you're thinking. Well, let's look at it, a couple of facts that you may not be considering. First of all, today, I'm guessing you work all week and spend money on Saturday and Sunday, right? That's when most people spend the most amount of money. You go to dinner, see a show, play golf. Okay, so let's take 1 or 2, 3 vacations a year. Well, here's a newsflash for you. When you retire,
every day is Saturday and Sunday.
Exactly. You've worked your whole life to be able to enjoy those retirement years. Traveling, not sitting around the couch watching game shows, right? So you want to make sure that you can enjoy it. Now, number 2, tax rates are currently among the lowest they've ever been in the history of tax rates. That's right. In 1980, when I first got in this business, I know, a long time ago, the top marginal tax bracket was actually 70%. You heard that right. 70%. A married couple earning $100,000 a year was in the 59% tax bracket. They did what you're doing, funding everything they could to lower their taxes for them. And it worked because today they're actually pulling it out at a lower rate. Those tax-deferred dollars from their 401ks and IRAs are only being taxed now at 25 to 37%.
They're still complaining.
They're still complaining. But it worked, right? Because they're in a lower tax bracket in retirement. Well, what do you think the chances of this working for you are, honestly? We have a national debt that's growing every single day, an aging population that keeps finding ways to live longer, and a government that can't stop spending. The only way to fix this is to get our government to either stop spending or raise taxes. Which one do you think's more likely to happen?
So what is the answer? We've talked about this in other videos, so you may want to watch a few of them. The ones that I really like is it better to pay on the seed or on the harvest? Or one of my favorites, Dave Ramsey may not be telling the whole truth.
That's a good one.
The answer is to pay the least amount of tax that you can today. Invest your money in tax-free vehicles, and then when taxes go up in the future, your tax on tax-free income will be 0.
It's a round number. 0.
Leave a comment in the section below and let me know if you have any tax-free investments. And after this video, check out the video we created titled, How Do I Use My Social Security in an Out-of-the-Box Way? To learn conventional wisdom may not always be the best way to think. The link is in the description below. Okay, let's get back to taxes in the future.
So you're saying I shouldn't have any tax-deferred investments? No, that's not what we're saying at all. The first rule of financial planning is take the free money. So if your employer provides a company match on your 401k, you should gobble that up. You should absolutely contribute up to that point. But then you need to consider some tax-free options with the rest of your savings. So if that same 401k does offer a 401k Roth option, many companies are doing that today, you should definitely put your contribution into that side of the 401k. The company is still going to put your match into the traditional side because they want the tax deduction. And of course, that eventually will be taxable to you on the growth and that contribution. But this is important, and you really need to understand this. You should only be putting into that 401k up to the match. Really, honestly, outside of that match, you need to look outside of your 401k for other tax-free options.
Ed Slott, a CPA and nationally known speaker and author, has a lot to say on this subject.
Love Ed.
I do too, and he's got a few quotes that I want to share with you. The key to a successful investing is to buy low and sell high, and the same is true with taxes.
Amen.
Your deductions on your 401k contribution is in effect a loan from the government.
I love this one. Roth conversions are a great deal. Take advantage of low rates today. I know it goes against your grain to pay taxes before you have to, but taxes are on sale today.
If 10 years from now, taxes were still where they are today, you can be comforted to know that all of your gains are now tax-free.
And finally, a quote from Henny Youngman. I'm putting all my money in taxes. It's the only thing that's sure to go up.
If you'd like to learn more about how to protect yourself from taxes in the future, click on the link below and apply to become our client. And if you liked this video, please give it a thumbs up, subscribe to our channel, and share it with a friend.
Thanks for watching. And as we always say, if what you thought to be true turned out not to be,
When would you want to know it?